But I know for serious investors, serious business owners, serious institutions, this is the kind of the depth that is required in order for you to really know what is really going on, and to be able to make the right investment decisions, right? But in that Q4 of the 2024 report, we covered things like Kenya, the fact that Kenya had entered into the Euro Economic Partnership Agreement with the European Union, and that was late 2024. Now, what does that mean exactly for the EAC bloc? Because it does look like, and it did raise concern amongst the East African community members, because it does undermine the customs union, the EAC customs union. Because it does create a potential parallel system with external parties that are not part of the EAC. But we also saw that inflation rose to over 8%. We saw that the foreign exchange pressures really remained really high. But despite all of this, what was absolutely incredible is that despite all of these challenges and all these pressures, Kenya's digital economy just remained to be the regional leader. So really strong performance in fintech, digital trade platforms, cloud infrastructure investments. We've seen like a wave of startups in decentralized finance, mobile payments, credit analytics. And we saw the continued attraction of private capital into Kenya, into this amazing innovation hub that Kenya has created. Now, in the Q4 2024 report, we've put like all the charts, the inflation tables, the sector outlook, so you can, hopefully you have read more into that. But we had also examined Tanzania, and Tanzania really, all in all, was like the regional champion in terms of stability. Macroeconomically wise, the public debt remained very moderate. I think it was around 45% of the GDP. Real exercising of fiscal prudence, effective tax policy reforms. We saw a lot of tax policy reforms also putting in place, investment law reforms as well. And this attracted obviously really positive signals from international credit rating agencies, and inflation was controlled. So it's not really like, what I'm saying here is not rocket science. Normally, when the macroeconomic environment is stable, you're going to see like a surge of investment going in. And that's what happened with Tanzania. I think the Tanzania Investment Center published that they recorded investments of $9.9 billion for the year 2024. So this is not really an accident. This is a whole host of policies, fiscal policies, legal and regulatory frameworks, macroeconomic environment that kind of made be a very attractive investment destination last year. And we're seeing that trend in 2025, it's not slowing down. So we saw massive activities in mining in Tanzania. Now, the Minister of Minerals just, I think yesterday, announced that their targets for 2025 was that mining would be contributing 10% of the GDP. It's only April, and they have reached 10.9% of the GDP. So mining is not slowing down. And of course, again, the policy frameworks around this, the mineral beneficiation strategy, real incentives that are being put in place to attract the local processing and reduce raw exports. This year, the first Q1 of 2025, Tanzania enacted the the New Investor Act, that basically puts forward special economic zones, special incentives for special economic zones. So we're going to see that mining companies and other sectors are going to be encouraged to actually add value in Tanzania, as opposed to the traditional model, which is to export raw materials that go and are processed somewhere else, and then, again, re-imported back into Tanzania. So Uganda, again, really, it was all about the oil. They experienced a lot of challenges in terms of getting the funding for their flagship project, EACOP, but also even for the oil. They were expecting that the first oil production would take place in early 2025. There's been a setback, but now it seems that they have gotten all the funding, and so most likely this is really going to be on track for late 2025. So this, like I said before, we've seen massive influx of investment in the oil logistics, in the infrastructure, in all the kind of energy adjacent services. But also there was an uptick in PPPs related to roads, pipeline networks, midstream logistic hubs, and this is not really slowing down. So this is what we've seen in the Q4 in the Q4 2024 report. Now, with regards to the Q4 2024 report, and I haven't gone into, for the interest of time, I haven't even gone through what's happened in Somalia, what happened in South Sudan, because there's 8 countries. But why is this information relevant, and how do we use market intelligence to profit? Okay, so now that you've seen the data and the sector signals, let's talk about something like more strategic, right? Which is, how do you actually use market intelligence to drive the profitable decisions? So when we work with our clients and investors, we basically use this 3-step method. So the first thing is we spot the signal, which is really, we watch for the macroeconomic shifts, the policy changes, the sectoral movements that suggest a turning point. Then we validate the signal. So we use the data from the reports to confirm what's real and what's noise. So we look for the alignment in policy, in capital flows, and also just the overall business sentiment on the ground. And then basically, with the signal, with the validation of that signal, you act before the crowd acts. So this is where the advantage lies, right? So you move in before the media, the mainstream analysts, or the slow institutional capital starts to react. So I'm going to give you 3 examples of how this played out from Q4 2024 to Q1 2025. So for example, logistics in Tanzania in Q4 2024, for those who have subscribed in our newsletter, we have been talking a lot about the logistics, like what's going on, the Tanzanian government really ramping up investment in central corridor logistics. But in the Q4 2024 report, we really go in depth in really looking at what exactly the Tanzanian government has been doing. So, upgrading ports and rail, and in particular to really support the DRC trade. So most people saw this as a routine infrastructure news, right? But for those who understood the timing and the regional trade shifts, they actually saw this as a signal. So in Q1 of 2025, 2 international logistic firms signed partnership deals in Dar es Salaam to build bonded warehouses and dry ports, anticipating the increased trade traffic from Burundi and Eastern Congo. So you see, our clients who moved early into logistics, real estate and, freight services, they were ahead of the capital flow. So this is kind of how you use those signals, you validate those signals to then take action, right? In Q4 of 2024, let's talk about the example of Kenya. The Kenyan shilling, like we said, was under intense pressure, inflation above 8%, external debt, concerns were growing. So our report signaled that while volatility would continue short term, the currency was basically approaching an undervalued level, like relative to fundamentals. So by early Q1 of 2025, FX pressure began to ease because, like I said before, we also saw that the central bank was enacting all these policies that indicated that the FX pressure would slow down by at least Q1 2025. But what happened is that a regional private equity fund used this timing to enter the Kenyan FMCG market, acquiring a controlling stake in a local distribution company at a valuation 20% lower in dollar terms due to this FX movement. So they didn't wait for the headlines, they followed the data and they took action, and they went in and they actually made a really good deal. Another example I can give you so many examples, but I'll give you the last example, which is basically Rwanda. So we tracked Rwanda's regulatory sandbox expansion, particularly around insurance tech and B2B credit scoring. So while it was still at the early stage back then, we basically flagged the country's progressive stance as an early signal of fintech scalability. So in Q1 2025, a West African mobile insurance firm announced its entry into Kigali using the sandbox to pilot its health coverage product for rural cooperatives. And that move basically unlocked additional funding and positioned them for the East Africa scale. So this is what our reports do. They don't just inform, they tell you when to act, where to focus, and how to get ahead. So now the question is, do you want to follow the news or do you want to lead the trend, right? So now the Q1 of 2025 report is shortly coming out. I think it's coming out in like 2 weeks time or 3 weeks time. So I'm just going to give you some top 5 teasers that we found in the Q1 2025 report, and hopefully you can take this data, take this information, and act on it. But you would get a lot more out of it if you actually read the whole of the Q1 2025 report. But what we've seen is that there's a massive shift, a big shift in Q1, is that the EAC now is actually coming to life. It's no longer just, meetings with heads of states and ministers and lots of declarations and all that, but there's actual technical execution. So we're seeing, for example, Somalia is now actively harmonizing its investment and customs regulations with the rest of the bloc. And, we're seeing that they're doing infrastructure mapping, they're reviewing laws that can become more harmonized, but also connecting Somalia's ports to Kenya, to the corridors of Kenya and also Ethiopia. But we've also seen that in February in Arusha, there was the Council of Ministers that met, and they basically reported that cargo clearance times in Mombasa and Dar es Salaam ports have dropped. And this is because of the shared customs tech under the single customs territory. We've already tracked early talks for infrastructure and trade corridor integration, especially in Kenya and Ethiopia. So what this means is that there's new investment zones that will be emerging at the Horn and the East African Community border. So transport and digital trade are going to be the first movers. So integration, which is so important because for so long, I've been one of those people that since I've lived in Tanzania from 2012, I had the opportunity to work with the East African community, and I was just ripping my hair out because I was like, the regional integration is the biggest opportunity, but it was just, we were really moving very, very slowly. But what we're actually now seeing, and I think this has a lot to do with a lot of the geopolitical shifts that are happening, like the U.S. Stance, the U.S. policies around tariffs, around cutting aid for Africa, and then the rest also of other countries as well that are changing their stance towards Africa. I think African countries are now waking up to the realities that, okay, we need to be together, we need to integrate more. it will be to our benefit. And so thank God we're actually seeing that this is the trend that is going on. Now, the second thing that we saw in our Q1 2024 report shows that the EAC is actually projected to grow. The EAC region, so all countries, 8 countries combined, is projected to grow 5.7% in 2025. Now, that makes it hands down the fastest growing region in Africa. So if you're not looking at East Africa, I don't know what you're doing. Maybe I'm biased, but I don't think so. It's the numbers, right? This is not just me saying, I'm Tanzanian and so come and invest. No, it's the numbers that are showing. When you compare it to other regions and other regional blocks, EAC is dominating and it's going to continue to dominate. The inflation we're seeing in Q1 is actually down almost everywhere. Compared to last year where it was quite volatile. The FX is a lot more stable. We're seeing that fuel prices are dropping. We're seeing that the monetary policy also is really like just pivoting so as to support, growth. And so this gives us a window where, it's an opportunity. It's like these are ideal conditions for investment before the next cycle of volatility begins. The third trend that we're seeing for Q1 in our Q1 2025 report is that there's these top investment themes that are emerging, right? Which is what we've already spoken about before, but infrastructure, railway, expansion of SGR networks, energy, the Uganda-Tanzania oil pipeline, the Uganda's final phase in the oil investment play for its first oil production. So we've been really tracking in the Q1 of 2025 report, like PPPs, private public partnerships. That is the opportunity, guys. There is so much opportunity in the energy sector for PPPs. And early investor activity in local infrastructure in energy is intensifying. So, of course, also for Kenya, we've seen the renewable energy is expanding and off-grid solar continues to grow as well in Uganda and Rwanda. FinTech, I mean, this is not slowing down. Like I said, Q1 2025, we're seeing Kenya and Rwanda piloting digital IDs and cross-border fintech frameworks. Uganda launched its startup hubs under its new innovation laws, mobile lending, B2B payments, SME credits, you name it. Agriculture, of course, is still very much, on the growth. Tourism, the demand is very strong. We've seen initiatives where Kenya, Rwanda, Uganda, like the EAC countries now are coming together to basically make tourism, to present themselves as a regional bloc when it comes to tourism, and to make things easier for tourists, meaning that, they don't need, 8, visas anymore, but only 1 visa. So we're really seeing policies moving into integration, more and more integration, basically, going forward. Now, another thing that we're examining in the Q1 2025 report is Tanzania. The Tanzania's basically 2025 budget signals. So the draft 2025 budget policy framework that is also analyzed in the Q1 2025 report basically signals that Tanzania is going to reduce the public capex and lean more towards the private sector partnerships. So this is big, guys. This means that the government is open for business and the government wants PPPs. Actually, the whole of the region, they just want PPPs. It's the new thing. It's the new thing. A lot of PPPs were not happening. Conscious drive towards that. As Tanzania, the Minister of Investment and Planning basically said, yes, there have been, cuts in aid that affect our budget. And the trade dynamics also have changed. And so this is why we want to focus more on attracting foreign direct investment, and we want to attract public-private partnerships. So this is the strategy for 2025, 2026 for Tanzania, PPPs. We're going to see a lot of PPPs opportunities coming out. Of course, with the laws in Tanzania, you can also have, you don't have to wait for an official announcement for a PPP. There's also single sourcing, so you can actually a PPP, a partnership with the government. So these are just 5 signals out of the dozens that are included in the Q1 2025 report. And now you know what's coming. So the real question is, will you move first, or will you wait for the news cycle to catch up? So this report matters because it gives you what the main data can't. It links macro data to private sector deal signals. It decodes what's moving versus what's just noise. But it also helps you to act in Q2. Too many times, people say there are no investment opportunities. No, there are investment opportunities. You just wait to react in Q4 at the end of the year when all the good deals and everything has just been kind of swept up, where the opportunities are, less. But investment opportunities are there all the time. The signals are there all the time. The validation is there all the time. The opportunities are there all the time. It's just up to you to kind of read the writing on the wall, like we say, and take action. And so if you're an investor, you're an analyst, a development partner, a regional entrepreneur, I know there's a number of you in here that are doing business across borders, like hands down, our investment reports are really like the map for navigating the Q1 2025 report is your map for navigating the next 90 days. So if you want to execute, here's what we've created. There's the Q1 2025 investment report that we're selling only for $99. And this has like country depth deep dives, sector opportunity maps, deal flow trackers, policy and macro analysis, and it will be dropping and available as of April 30th or 1st of May. But then why just stop at one investment report when you can get the whole annual report and be on top of your game for the whole year? So we also have the annual subscription that is only going for $599. So that's like 4 quarterly reports. Then there is like the bonus, which is like investor visuals. You have calls with our teams. There's early access, alerts, charts. But then also you get access to private webinar sessions that would be held with prominent business leaders in the region, government policymakers, really exploring more in-depth topics on investment in East Africa. And next month, for example, we're going to be holding a webinar with a minister, 2 ministers actually, in the East African region, and we go dive into what we can really expect for the next few months in this given country. So these reports actually, like, if maybe some of you in here, like, work with the likes of PwC, Deloitte, and, but, these reports go for, I don't know, $50,000, $60,000, whatever it is. For us, we're just like giving them away for $599 for the annual subscription. Why are we doing that? We're doing that actually because for us, it's really about, we understand that there's so much information gap in East when it comes to East Africa. There's so much information gap when it comes to East Africa. And our mission at Swiss Chicana Investment and Advisory is to mobilize billions of dollars into the continent, because that is what is going to eradicate poverty, investing in private sector, allowing for African companies to grow, to thrive. That is what is going to make our countries advance. So when you have a goal like that, like we need to get in as many people as possible excited about East Africa, because it is exciting. It's like one of the most exciting regions, I think, in the world. And so we don't want to have a crazy, fee that would mean that, again, the information would not be accessible to most of the people. So yeah, that's kind of where we're at right now. I hope I didn't bore you too much. I know I didn't bore you because I think it was really interesting, but yeah, let's open up the floor now for any questions. If anyone has any questions, please raise your hand and you will be able to ask your question. I think you can either ask the question, or I think you can ask the question in the chat room, I think. And we can answer that, or you can also just raise your hand and you'll be put on loudspeaker and you'd be able to ask your question like that as well. Let's go. Okay. Let's see. Hi, John. Hi, John. Hi, what's the outlook for pharma manufacturing moving into East Africa, excluding Chinese and Indian players? Thanks, John. Okay, that's a really good question. Pharma is a big thing. So a lot of the drive for the special economic zones is also keeping in mind that that is a sector that all the countries want to be able to attract investment in. After COVID, in terms of what happened with COVID, for example, where a lot of African countries are prioritizing that. And so there is a big opportunity for pharma manufacturing in East Africa. I can talk, for example, in Tanzania, the opportunity definitely is there. I'm a board member of the Tanzania Investment Center, for example, so I know that this is a priority sector for the country. Yeah, so, and it's true, like so far there's been a number of Indian players, I would say, more than Chinese, but yeah, definitely a sector to watch out for with opportunities in 2025 moving forward. Any other questions? From Andrew. Hello, Amne. Thanks for the presentation. Are you seeing a shift in Tanzania for the government to provide a guarantee to power purchase agreements? That's a question that a lot of people ask me. No, I don't see the shift for Tanzania to provide guarantees in any guarantees, actually, whether it's for PPAs or for any other sector. Tanzania just no longer gives government guarantees. And it's a shame because they used to. And the reason why they don't anymore is because of supposed abuses that took place. But yeah, I mean, I think that if they were able to, it would make the sector a lot more attractive than it already is. Okay, another question. Google Consulting. Would you see a similar move by the Tanzania government happening in the gold mining sector as what just happened in Ghana, Matthias? Hi, Matthias. Okay, so I think you're referring to the fact that Ghana has stopped all exports by foreigners of gold. Do I see the same thing in Tanzania? No, I don't see the same thing in Tanzania directly. But what we have seen in Tanzania, for example, is that the government now has positioned itself as a purchaser of gold. And they have somehow, I think they're giving a big challenge to the exporting, to the investors that are exporting the gold outside, because when you're purchasing gold from the when you're selling gold to the government, it's VAT exempt, whilst if you're selling gold to anyone else, VAT is on it. So it's not exactly what's happening in Ghana, but indirectly, somehow positioning the government as the number one buyer and the number one player when it comes to gold is the angle also that Tanzania and a lot of countries in Africa, I think we're going to see that as a trend, just because they want to build the gold reserve for also stabilization of their currencies and etc. So I think, yes, we're going to definitely see more of that. Okay, next question. Jafari, hello Amne, hi Jafari. With the recent surge in global cocoa prices, what is Tanzania's current position in the cocoa market, and how is the country responding to this increased demand? Additionally, could you provide an update on the bamboo project and its current status? Thank you. Okay, so they've been a little bit in terms of like how Tanzania, the cocoa sector is positioned, is that the prices are regulated, number one. But number two, there's been a few challenges in the cocoa market in terms of the growth. There was a bit of a slowdown because of some regulatory changes that were made that basically were not in harmony with the regulations, let's say, in the EU. So it made for cocoa, the way it's sourced, the way it's farmed, and then, kind of traded, to not be compliant with some of the EU, for example, regulations that are in place. So we actually saw that the cocoa, there was a slowdown in the cocoa market because of that. But hopefully that, there's been stakeholder engagements and that those regulations will change so as to have to see the trade volumes that we were seeing prior to 2024 in the cocoa sector. And on the bamboo project, okay, I think the bamboo project, yes, it's coming along. I'd be happy to discuss this more with you offline. Okay, any other questions? Yuresh, I'm wondering if we can just not bring people up and ask them and they can ask the questions, or is this the only way to do this, to read these chats? Because I feel like I'm missing some of these chats because there's quite a few questions and I feel like I'm missing some of them. John, no mention of Ethiopia. Any plans to include Ethiopia in the near future? Yeah, no mention of Ethiopia because Ethiopia is not officially an East African community member, even though there is a lot of things happening in Ethiopia with other East African community members. So in our reports, we do mention them, but we don't do a deep dive on Ethiopia just because Ethiopia is not an EAC member state yet. Maybe they'll become one. Okay. The next. What's from Yuresh? What specific countries in East Africa are showing strong signals? Okay. Tanzania. Tanzania, Uganda is also showing very strange strong signals, just because when they start producing oil, they'll just be on a totally different level. So definitely Uganda's showing very strong signals. Tanzania, because of just the general stability, macroeconomic stability, but also just the ongoing reforms that they're doing in terms of the business climate and business environment. We're seeing that, that's also, they're really showing strong signals. Kenya is a hard one, before it was like, yes, Kenya, but given I think a lot of what has been happening in Kenya, the kind of Kenya, Kenya is a bit of a nuanced one, right? Because despite all the challenges, the FX weakening, the high inflation, the riots, the cabinet dissolving, the deputy. I mean, there was a lot of drama in 2024 with Kenya, but we still saw actually that there were certain sectors that remained to be extremely resilient. So I think for Kenya, I would say, like, for example, fintech, it does not look like, despite the instability, I would say, but it looks like the private businesses are getting on with things, and they're doing what they need to do, in terms of growth, and all of that. Okay. Any other questions? Okay, I think I've gone through all the questions now, and actually it looks like we only have like just a few minutes left. So yeah, guys, thank you so much for having made the time to be here. I really hope that you had so much value from this, but please check out the link. Yuresh, please put this in the chat box. The link so that you could buy these investment reports is absolutely crucial. You get so much insights, so many more insights. So the link is going to go into the chat box right now. Please get the reports. They're absolutely amazing, but also then you would get into a really amazing community. Right now, we're just a small community, 3 people, but we're growing, where we can exchange. And then, of course, looking forward to these private kind of roundtables that we're going to be hosting with various government leaders and business leaders, so that you can really get more insights in terms of East Africa. So yeah, the ball is in your court. Check out the link. It's right there in the chat box. Yeah, let's continue talking about East Africa, promoting East Africa. Let's continue investing, doing business, highlighting the best of our beautiful region. And yeah, I look forward to, we'll be hosting another webinar, like I said, next week, next month, sorry. And yeah, so thank you so much, everyone. Be blessed. Have a wonderful evening. Take care. Bye-bye.